Hello and welcome. You're watching AAYC, which is all about your company, which is what you want to know with regard to individual listed companies. We do a 30-minute show every day, and this is that show. Let's quickly zoom into the company that we're going to focus in today, which is Krishna Institute of Medical Sciences, KIMS, in the healthcare space. Why is this important? Why is this company in focus or relevant? And the first piece of that is because, one, you're starting to see healthcare do very, very well. You're seeing an outperformance in that segment, in that space already. And essentially, what you want to know is that how does the EBITDA growth kick in with regard to KIMS? The second piece is what is the risk from the insurance industry? There has been some back and forth with regard to insurance and healthcare providers and how much they reimburse in terms of the healthcare cost. And that risk seems to be quite real in that sense. So that's the second piece we'll dive into. The third piece is the gap between operational and actual bed capacity. Now, the hospital chain has 8,800 beds, but on the operating side of things, it operates sub 5,000 of those beds. I want to try and understand whether the gap can be bridged, and if so, how quickly. Why is that bed capacity vacant? Is because of various factors, from staffing costs to optimization. All of that is still required, and therefore you want to wait it out and see as to how quickly does that ramp up happen on the difference. How the Bangalore hospital is doing. They've opened a new hospital in Bangalore, currently sub 1%, in fact sub 0.5% of their top line. How quickly is that getting ramped up is the question. The fifth piece is with regard to CAPEX plans going forward. How strong is the CAPEX velocity? Because you've already got a decent amount of debt on the balance sheet, and that will also be one of the points I want to look out for. RPOP direction. They've guided for nearly 50,000 rupees of RPOP from the current 41,000 in the next 8 quarters. How achievable is that, and what are the factors which will help them achieve that number? The debt guidance, I did speak about that, and the last piece is margins and profitability, because at the end of the day, you're going to value business at price to earnings multiple. So you want to see all of the RPOP translate to profitability. So we'll try and dive in and try and get you all of that by the end of this show. Let's start off with KIMS. What does the company do? It was incorporated in the year 2000, so 25 years. It has been in this space. It's the #1 organ transplant hospital in South India, or has that as one of the slew of other firsts that they do. Also, with regard to ECMO, which is typically a life support system, it has the largest number of ECMO machines, in fact, in operation currently. It operates 25 hospitals, 8,800 beds, and 4,700 of those 8,800 beds are fully operational. So that is the other piece. In terms of services, a whole host of services is what it provides. Cardiac services, which is heart-related, orthopedics, neuroscience, gastric, mother and child, renal, oncology, and organ transplant. And then you have other services like ENT, eye care, and you have a decent mix of all of those services as well, which you can see on your screen. It's a very, very decent mix. Let's talk about the business model. 80% of the revenue comes from the owned hospital space. Then you have ancillaries, partnerships, O&M contracts, and the like, which contribute to 20% odd of the revenue. Let's talk about the geographic presence. Currently focused in South India, Telangana, Andhra Pradesh, Maharashtra, Kerala and Karnataka. Karnataka, they've just launched, but outside of that, if you see the tilt is towards South India. Now let's talk about the metrics again, and we'll start off with the P&L. The top line has grown at a fairly healthy rate, 23% in that sense on a 3-year CAGR basis. Well, that's the RPOP, of course. We'll come to the operational numbers, but that's on the top line number. You can see the 23% growth we've seen over the last 3 years, 15% on the EBITDA number, and that's because as new hospitals come on board, you are seeing a lower RPOP, which is the revenue per operating bed. You're seeing a lower number there, which is what is causing a deflation in the EBITDA versus the growth that you're seeing on the top line. And as those hospitals start to get optimized, as the bed capacity starts to fill up, you'll start to see the EBITDA also rise disproportionately because the RPOB will go up, and that's the guidance with regard to RPOB. I'll explain that piece. When you're looking at margins, they've shrunk as a result from 32% to 26%, as you can see on your screen, and in fact it's shrunk to 22% now in Q2 of FY26. Your net profit number is has in fact come off, and that's in H1, but outside of that it's just given a 6% PAT growth over the last 3 to 4 years. So that's the other concern. Both of those need to unwind. Let's talk about the operational metrics, and within that operational metrics you'll see bed capacity, which has gone up, and this is the operational bed capacity, which has gone up to 6,100 odd beds. The occupied beds though are just 2,400, so you're not seeing tailwind with regard to occupied beds. Your occupancy is currently sitting at around 51%. Mind you, it was 61% in FY24, so that has come off, and that is, as I explained, because of the new hospitals coming on board. Due to that, you're seeing occupancy levels fall, and you're seeing RPOB though continue to inch up, but at a far slower clip. So the FY24 to 25 inch up was sharp, but thereafter we've seen a slowdown with regard to that RPOB inch up. So you want to look out for that, and that has to climb to 50,000 is the guidance given. Let's talk about geographic presence. In terms of the geographic presence and the RPOB within each geography, that's the state. Now 68,000 rupees is the RPOB in Telangana. So once your hospital start maturing, that's where your RPOB will come from, and it contributes around 60% to the revenue of the company. Andhra around 25%, 11% from Maharashtra, 4% from Kerala, Karnataka currently at sub 1% thereabouts. Let's talk about the balance sheet now. Now the numbers, metrics themselves don't look particularly impressive. We need to wait and watch as to how the turnaround there happens, so we've given that a neutral. Let's talk now about the balance sheet. In terms of the equity within the balance sheet, you're seeing that it's at around 2,270 crore of equity value. The borrowing number is around 2,500 crore. So the borrowing has gone up, and it's gone up significantly. From 500 crore, the borrowing number has gone up to 2,500 crore over the last 3.5 years. So you've seen a substantial inch up. That's where a part of the concern is. As the CAPEX cycle has started to play out, they've taken on plenty of debt onto that balance sheet. I'd want to also know how quickly that unwinds. Remember, that was one of the questions we had put across. Let's talk about cash flow now. The cash flow is fairly steady. The cash flow from operations to EBITDA number is largely steady at around 70% odd. It fluctuates between 70 to 80%. So it's a fairly steady number. Again, no concern there. Now let's talk about the net cash flow. The net cash flow obviously is largely zero because they are investing a large amount of the cash flow coming in into newer hospitals and taking on further debt to make those investments. We spoke about the new Bangalore hospital that's come up. Let's talk now about return ratios. Return ratios which were around 30% in FY21-22 has come off sharply. Why is that? Well, no surprises. New hospitals, occupancy is falling as a result of that, and RPOB also largely okay. We're not seeing a significant inch up there. So that's largely the reason why you're not seeing an inch up with regard to the ROE numbers. Plus fresh capital investments made in the newer hospitals. That's keeping the ROCE number well under control, well under 20% right now. But you want to see that inch up. This is the other place where there is concern. Now let's talk about shareholding. When you're looking at the promoter shareholding, it's fallen from 39 to 34%. One of the promoters has sold his stake, which was around 4% odd in the quarter ended June 2025. Thereafter, it's been at 34%. But 34% is not bad from a promoter standpoint. That's fairly okay. You're seeing FIs and DIs also own a fair chunk, as you can see, 15 and 32% DI ownership. So there's plenty of DI ownership within the hospital space. The number of shareholders have also gone up quite substantially when you're looking at it. Let's look at valuations now. The valuations not looking particularly expensive versus other hospitals. Mind you, there is more diversity to this one versus some of the others. Global Health at 46 times, Aster at around 56 times, Narayan at 36 times, and Rainbow Children at around 42 times 1 year forward. KIMS sits at 56 times. Again, fairly neutral on this count. Maybe a bit of a thumbs down, but the kind of growth that it could clock given the fact that they already have beds on the side, which just have to go operational, is something that you want to keep your eye out on. Now, analysts, let's look at the analyst recommendations. 18 buy calls, 1 hold, 2 sell. You also had a Goldman Sachs initiating coverage today with an upside, and therefore the larger analyst consensus seems to be positive. A 13% upside is what they see from here on a KIMS Hospitals. Now, largely that's how we're looking at all of the metrics and the company. What we're going to do is we're going to speak to the company on the other side of this very, very short break. That's currently the first initial glimpse of what KIMS does.